Good evening. I hope you all had a nice day. Today the market didn't do a whole lot compared to previous days. The Dow ended in the red as it lost 0.23%. Both the S&P 500 and Nasdaq gained though. The S&P 500 rose 0.28%, and the Nasdaq put up the same daily gain of 0.28%. Yesterday after the market closed, the CDC announced that they will be banning U.S. cruises through September 30th due to outbreaks occurring on board ships. The CDC's no-sail order was previously due to expire on July 24th, although the Cruise Line International Association had previously agreed to postpone operations until September 15th. The Commerce Department reported that construction of U.S. homes rose 17.3% in the month of June. Even after a second straight month of increases, construction activity remains 4% below last year's pace. Applications for building permits, which acts as an indicator for future building, rose 2.1% to 1.24 million units. It'll be interesting to see how this trend will continue, as mortgage rates continue to reach lows week after week. We got news regarding the potential new relief bill. President Donald Trump said that he will refuse to sign the bill if it does not include a payroll tax cut for workers. This idea hasn't been well received by people on both sides of the political spectrum. Garrett Watson, a senior policy analyst at the Tax Foundation, said, quote, "The benefits primarily would accrue to folks who already are working, and we currently have record unemployment," end quote. Other policies that are under consideration are the extension of extra unemployment benefits or even back-to-work bonuses. Even if the payroll tax cut doesn't make it into the bill, Trump has suggested that it should still be suspended for the rest of the year. This has been met with criticism, as the money from the taxes go to fund Medicare and Social Security, both of which are expected to run out of funds in the not-so-distant future. Blackrock CEO Larry Fink said that stakeholder capitalism, which is the thought that companies have more to provide than returns to shareholders, is set to become important. He said, quote, "The one thing that is very clear in this COVID world is that stakeholder capitalism is only going to become more and more important, and the companies that focus on all their stakeholders, their clients, their employees, the society where they work and operate, are going to be the companies that are going to be the winners for the future," end quote. He cited that his firm has seen a surge in money from investors who wish that money is put towards areas such as renewable energy. Fink said that as younger investors continue to acquire equities, there will be more pressure on companies' policies. Fink said, quote, "I think the existential threat of COVID, the racial inequalities that we've witnessed in the last 2 months, I do believe the younger generation is going to be more vigorous in terms of social issues and environmental issues," end quote. Supreme Court Justice Ruth Bader Ginsburg says that she is fighting liver cancer and is currently on chemotherapy, which is giving her positive results. She seems poised to continue her work on the Supreme Court, as she said, quote, "I've often said I would remain a member of the court as long as I can do the job full steam. I remain fully able to do that," end quote. According to economists at research firm IHS Markit, the economy may experience a W-shaped recovery due to the surging amount of virus cases and their view of the current economic conditions as fragile. The economist said, quote, "The logic underlying our forecast of a bounce and fade has not changed. Consumers and businesses remain cautious. Unless fiscal and monetary authorities provide more stimulus, a key support for the recovery will disappear soon. The new wave of infections has reduced the probability of a V-shaped cycle, something to which IHS Markit did not subscribe, and increased the risk of a double-dip recession, also known as a W-shaped cycle. The likely timing of a second downturn would be late this year or early 2021. The economic contraction would probably not be anywhere near as severe as the recession we just went through. Bottom line, while the worst is probably behind us, The global recovery remains weak and subject to further downside risks." End quote. UN officials issued a warning about the possible decades of tragedies if wealthy nations do not step up to help out other countries who do not have the resources to get through the virus. They said, quote, "Unless we act now, we should be prepared for a series of human tragedies, more brutal and more destructive than any of the direct impacts of the virus itself," end quote, citing that these impacts could, quote, "undo decades of development and will create decades worth of tragic and exportable problems," end quote. They did note that these tragedies are preventable, saying, quote, "It can be fixed with money and leadership from the world's wealthier nations and some fresh thinking," end quote. Yesterday, the U.S. completely shattered its previous record for new daily cases. Yesterday, there was an uptick in new cases of 77,200, with the previous high being 67,791. That's a difference of nearly 10,000. New cases are rising in nearly every state. 44 states and the District of Columbia all reported that the 7-day average of daily new cases rose by more than 5% on Thursday, compared to a week earlier. The state of Texas is beginning to brace for an uptick in deaths. The state has ordered more body bags and refrigerated trucks. This is an unfortunate situation, and may be a situation that we will see occurring in other states who have been experiencing a surge in cases. Dr. Fauci urged that the U.S., quote, "needs to get better control of things," end quote, before we can reopen the economy and come back to a form of normalcy. He said, quote, "The United States of America has been hit very severely by this. You just need to look at the numbers and see the numbers of infections in the millions and the number of deaths. They keep going up each day. We're still seeing an increase in hospitalizations. We need to get better control of things. We need to open up the country because staying shut down has economic, employment, health, and other negative consequences that are significant." The city of San Francisco is pausing its reopening plan and will be closing indoor malls and non-essential offices due to a recent rise in virus cases. Earlier in the week, the governor of California ordered a certain list of counties who are currently struggling to contain the virus to close indoor operations for fitness centers, worship services, personal care services, malls, offices, hair salons, and barbershops. This is a reality that many cities across the country could face, as the U.S. struggles to gain any form of control over the virus. New York Governor Andrew Cuomo did the opposite and has cleared the city to enter the next phase of the reopening plan. Governor Cuomo said, quote, "I'm so proud of what New Yorkers have done, but we must continue to be on alert," end quote. Indoor restaurants, bars, museums, and malls will all remain closed. The sectors were all over the place today. Oil and gas and consumer services performed the worst by far, while utilities stole the show as the sector gained more than 2.3%. Healthcare, basic materials, and industrials all gained more than 1% today as well. Value took a very minor hit today, and growth and core stocks each put up pretty good days. Notably, mid-cap growth gained the most, as shares rose 1.27%. The stock that gained the most in the S&P 500 today was Intuitive Surgical, which is a company that makes robotic products designed to improve the outcomes of surgery. Shares exploded for a gain of 7.69%, but it is not clear as to what caused the gain. The other winner was AES Corporation, which generates and distributes electrical power. Shares rose slightly more than 5%, but again, it is not clear as to why. Currently, the company seems pretty cheap, and it could be that investors are beginning to move into value. The biggest loser of the day was Netflix, who tanked after they missed on EPS and hit on revenue. Netflix did beat estimates for new users, but their guidance for future growth is disappointing. For the third quarter, they are guiding for an increase of 2.5 million users versus expectations for guidance of 5 million new users. Net income did improve, and so did their operating margin. Ultimately, it came down to the disappointing guidance, which caused shares to fall 6.52%. The other loser was MGM Resorts, which had shares fall by 4.49%. Again, it is not apparent as to why shares of the casino and resort company fell, but we can guess that it has to do with the continuing rise in daily new virus cases. Getting into earnings, we'll start off with Ally Financial, ticker symbol ALLY, which is a digital financial services company. Ally Financial posted pretty positive earnings, as they beat non-GAAP EPS by 35 cents, and ended the quarter with a gain of 61 cents per share. Revenue only beat expectations by a mere $60 million, as they finished the quarter with revenue of $1.53 billion, representing a decline in revenue of 1.9% on a yearly basis. Though, net income did drop by 59% on a yearly basis to $241 million. Shares were hit hard after this news, finishing the day down 5%. Next up, we have Blackrock, ticker symbol BLK, which is a global investment management firm. BlackRock posted positive earnings for the second quarter. Non-GAAP EPS came in at a gain of $7.85 per share, topping estimates by 90 cents. Revenue rose by 3.7% on a yearly basis, coming in at $3.65 billion for the quarter, which beat estimates by $100 million. Assets under management rose 7% on a yearly basis. Bank of America reiterated their rating of BlackRock as a buy and maintains their price target of $633 per share. Analyst Michael Carrier said, quote, "Overall, solid results in a tough backdrop, and given expectations for a healthy flow/growth outlook over time and active capital return and expense management." End quote. Investors were pleased and shares gained 3.66%. Lastly, we have Autoliv, ticker symbol ALV, which is an automotive safety supplier that makes sales to all leading car manufacturers worldwide. Autoliv had poor earnings. Non-GAAP EPS missed estimates by 15 cents, as they ended the quarter with a loss of $1.40 per share. Revenue dropped 51.4% on a yearly basis, as they finished the quarter with revenue of $1.05 billion, missing estimates by a small $30 million. The company expects second half of 2020 profitability headwinds from lower inflator replacement sales, costs relating to Factory of the Future investments, and higher depreciation and amortization, and expects profitability tailwinds from cost reduction actions. Shares fell 5.23%, as investors were obviously upset with the disappointing earnings. That is all that I have for tonight. As always, I hope you enjoy your weekend, and I look forward to seeing you again on Monday.